Hello, traders. It's time to recap the month of June. Every single trade from every single video that I posted to YouTube is going to be reviewed. This is not cherry picking. You can see my YouTube channel here. OneOption is all you need to query. You can also find a link on my homepage. I post a couple of them per week and I try and get the videos out before the open. Again, the point here is that you can see every single one of these and get a feel for how dang successful this system is. Enjoy. Good morning, traders. It is Wednesday, June 8th. We're about an hour and a half before the open. Want to get a video out. This is my first video of the month. Got a nice pick. Did not have a highlighted trade previously because I took some time off. Let's take a look and see what I found. BABA. That is your pick of the day. I like it on the long side. Very, very important. I am only day trading. Now, this stock could work for a very, very short term overnight position. I'll get through that in just a minute, but let's take a look at how I found it and why I like it. So I'm going into a search in Option Stalker called Royal Flush Bull. And as I go down the list, you'll see that BABA has a trade signal, a buy signal more specifically, across all time frames. So that means that it looks good on a 5-minute basis, but also on a daily basis. There's some nice momentum building. In fact, if we went through all of these stocks, you'd see some pretty nice patterns. Now, the one thing that you'll notice as you go through the list is that this list is heavily dominated by Chinese stocks and energy stocks. VLO, XOP, COP, XOM, MPC. These are all refiners and energy stocks. Alibaba, PDD, ZM. Those are all Chinese plays. BILI. So those are two sectors that we're seeing strength in. Very important that we have that tailwind because right now the market is not offering us much in the way of a tailwind, not offering us much in the way of any kind of momentum. We have the FOMC statement coming up next week. We'll get into market analysis in just a few minutes. You can see this downward sloping trend line on BABA that's been preached to the upside. That's nice. However, I'm not as crazy about these downward sloping trend lines that are violated because of time. What do you mean? What do you mean, Pete? Well, if Alibaba had just formed a base, eventually it was going to break that trend line just because it was forming a base, not because it was bouncing higher. But in this case, I do like what I see. You can see this low that we formed back in March, and you can see how subsequent lows have been much higher than this low. And now we have 3 lines of support right here. That tells me that buyers are interested. In fact, they're more aggressive because they never let the stock get down to this previous low. They want in now. And we do have a little breakout. So let's go in and take a look at what's happening on a daily chart, but let's zoom in and really see that price action. There's the low I referenced. There you've got the other 3 lows. There's your downward sloping trend line. You can see horizontal resistance right here around the $100 level, and the stock has been able to rally above it. So let's also go in and take a look at what the stock has done on a 2-hour basis. And let's overlay the SPY. I'm sticking with this micro view because I want you to be able to see how the stock is performing. So look at this heavy sell-off by the market right in here, the SPY being the gray line, and look at the stock. As the market made new lows, the stock was holding these prior lows. That's a sign that institutions are starting to come in and nibble. Good morning, traders. It is Friday, June 10th, the last trading day of the week. Let's get going. Let's take a look at the last pick. I recorded my video and posted it before the open on Wednesday, 2 days ago. My pick of the day was BABA. That was an incredible pick. Look at the stock opened around $108, rallied all the way up to $122. That was more than a $12 winner in one day. If you get a gain like that and you get a sustained move like that in a market like this, take your gains. That's as good as it's going to get because the market is currently chopping around up one day, down the next. You've got to be in, you've got to be out. This is a very difficult swing trading environment. So, BABA, awesome pick. So, let's see if we can find something that lines up well for today. First, we have to take a look at the market. So, let me take a quick break. A upward sloping trend line. You can see there's your bearish flagpole. This is a bearish flag formation below the 200-day moving average, CLF. Yes, I like CLF on the short side. So I got a decision to make. UPS, MOS, CLF. I'm going to pick CLF as my short of the day. There's your upward sloping trend line. There's your breakdown, horizontal support. Also being tested here yesterday. So what do I do today? S&P futures currently down 30 points. Do I rush in? Do I short CLF instantly on the open? No, there's no reason for you to do that. You have to wait to see what the market does. Maybe the market's going to bounce this morning. So on those bounces, what you'll be wanting to see is that CLF can't get off the deck. So CLF opens on its low, market rally, 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 rally. CLF not participating. When you see that pattern, then you know that sellers are very, very aggressive. They want to unload those shares. And that is why the stock is not able to bounce. As the market starts to roll over and sell off, guess what's going to be leading the charge? Stocks like CLF that could not get off the deck because the sellers are going to get more and more aggressive and the buyers are going to pull their bids. That's how all of this works. So CLF is your pick of the day. Hello, traders. It's Sunday evening, June 12th. I thought I would do a video, take a look at what's going to be happening this week. We got the FOMC statement coming out Wednesday. We've had some market weakness. I'm going to get to that in just a bit. Let's take a look at my pick Friday. I put the video out before the open. CLF, Cleveland Cliffs, was the short of the day. You can see here how the stock gapped down, as I mentioned in my comments. No reason to rush into any trades. The market was going to open lower on Friday. Patiently wait. You can see how the stock was not able to fill the gap. After about 35 minutes or so, you've got an opportunity to short. You can see how the stock gradually drifted lower. S&P futures right now, Sunday evening, are open. They're indicated about 35 points lower, so we're going to get a weak open tomorrow morning. CLF should be weak also. I think this is going to be a really nice trade. One that I'm going to focus on is letter U, and I'll show you why. We had this really nice, steady decline in the stock, earnings after the close, and a big drop. Typically, stocks are going to bounce a little bit in here after a big drop like that and a big sell-off. This stock could not get off the deck. The best way for me to demonstrate that is S&P 500. So you get the big drop in the stock right here. Market also drops, and look what happened to the stock. Got flat price action, but look what happened to the market. Big rally. This stock did not participate at all. That tells me that sellers, whap, 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 are still close at hand. Now we have this nice little upward sloping trend line right here. Many, many touches and a breakdown on Friday. So yes, the relative weakness is starting to build. You can see it right here on the D1 basis. And let's take a look at that 15-minute chart. And you'll also be able to see that, yes, early in the day it had lots of weakness, and then it just kind of compressed. Another question that came up was, hey, Pete, I had a bunch of stocks that looked like great shorts on Friday. Market sold off, and then they just compressed. Well, that's what the market did. We had a gap and go formation, And you can see how Friday the S&P 500 fell. Then we had some follow through selling. And then the rest of the day, it was absolutely pancake flat. Not a great trading environment for day trades. Tomorrow, what we would like to see, we're going to have another gap lower. We would like to see a bounce. We'd like to see that bounce stall out before it fills in the gap. We want to see lots of overlap in the candles. We want to see a mix of red and green candles. That would tell us that the trend is weak on that bounce. And then eventually, we want that bounce to stall out before it fills the gap, and then we want to start seeing the market roll over. When you see that, what you'd like to see in the letter U is stock can't get off the deck. So if U opens lower, we want it to continue to stay on the low of the day, low of the day, low of the day, while the market tries to bounce. Then when the market bounce stalls out, we want to see U falter quickly. That would be a sign of relative weakness. That would be a sign that it's time to enter that trade. Hello, traders. It's Thursday, June 16th. We're about 2.5 hours into trading. Let's take a look at my last pick, letter U. This is where the video was posted before the open. Yes, there was an opportunity. Stock went from about 35 down to 33.50. There were some opportunities in there to make money on the short side. You can see that the stock did bounce a little bit, but today it's right back at it. There is some definite weakness in this one. Decent pick, not my best one, but very difficult because we also had a market that dropped about 90 S&P points on the open. So, and I also like MPC on the short side. So, this would be your caveat for the trade. We need to see MPC close below this upward sloping trend line, which comes into play right around 93.50. That also puts it below the 50-day moving average, and that is where you should take a short position provided that the stock still has relative weakness. This is a 5-minute chart, and you can see how the stock does have these little bounces. So if you're looking to short MPC, you can see orange line below zero, very, very weak. You want to be taking profits here on these long red candles because you know it's going to bounce. And then it bounces. You wait for that bounce to stall out. Okay, okay, okay. Meanwhile, you're watching the market. All right, market's still weak. All right, I think I can reload my short. Okay, here we go. Long red candles. Now we're compressing. Tiny bodied candles. Okay, let's take some gains in here. Oh, look, we're getting a little bit of a market bounce as well. So this would be a good time to take my gains on my short, let this thing release, and then wait for the next wave of market selling and wait for that bounce to stall out. Reload here, take gains down here. MPC, I like this short. That is going to be my pick of the day. I'm pretty confident that when I do my next video, it's going to be lower. And you can see here how that trend line is significant. So is the 50-day moving average. You can see the selling pressure. Right now, the fear is that the Fed's actions are going to push us into a recession. Well, that will not bode well for energy stocks. That's why basic material stocks and energy stocks. Hello, traders. It's Monday evening, Juneteenth, June 20th. I hope you're all enjoying the holiday. Let's get right to it. I like to start all my videos off with the previous pick. That way you can get a feel for the performance and the system that we trade. MPC, huge winner. Before the open on Thursday, this video was released. You can see how the stock opened around $97. Look at that sell-off Thursday. Now, in all fairness, I am only day trading. But if you came in Friday morning, you saw that the market was down. You've got this long red candle through the prior day's low on heavy volume. You know you're going to get some follow through. So, yes, it was a great day trade for Thursday. Still a lot of meat on that bone on Friday. Plus, look what happened Friday. You had a market rally during the course of the day, and the stock was not able to get off the deck. So, no real reason to be shaken out. There's your rally, S&P 500 on Friday. Look at the stock, can barely get off the deck. That tells you that there's still some selling pressure, but you should have taken profits because we are only day trading. Going to come across CRWD. Quite a few things that I like about this, so let me go through all the technicals and why I like it. First of all, you're going to notice that we've got this nice upward sloping trend line. So when I see something like that, I want to make sure that I'm dropping my trend lines here. I can also see that the stock recently broke a downward sloping trend line, a very steep one. So I'm not as interested in that because these very, very steep trend lines, they're easily breached. But it was able to get above that level and it was able to hold that support. Here is a horizontal resistance level, now support, that's been able to hold. I like that. I also like the fact that the stock has got a nice horizontal support level right in here. You can see 10 SI greater than 0. That means that the stock has been strong relative to the market. Here's another way to look at that same information. I put up SPY. This is what the S&P 500 has done. Boom, 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 boom. Absolutely relentless selling. Guess what? Which sector got hit the hardest? Tech. This is a tech stock. When a tech stock is holding up well relative to the market and relative to its sector, it tells me that institutions are out there buying. So we can take a look at CRWD and we can overlay the QQQ to see how it's performed relative to QQQ. And the gray line in this instance will be QQQ. Here you go. Tech stocks getting pounded. Tech stocks making a new relative low. That was the previous low in QQQ. Boom, we took that right out with ease. But look at this stock. It's actually making higher lows. I like CR. Good morning, traders. It is Wednesday, June 22nd. Want to keep this very, very short. Market has been super weak. I did a video Monday evening. That was a holiday. Said, listen, we have a big, big drop in the market. I suspect that there is a bounce coming. I don't know when it's going to happen, but let's have a day trading long ready to go. I want to make sure that the market's able to open above this open right here, which is SPY 370. That's the first condition. It was met yesterday right on the open. Again, I didn't know when we were going to get that bounce, but we happened to get it yesterday. CRWD. I also had a caveat that on CRWD we wanted to be above 167, which was right about in here. You can see the stock opened. It was able to get above that prior day's high, which is kind of why it picked that level. And if you got long on that breakout, you had a really nice $3 to $4 breakout. Could have made money. No swing trading longs. The market is down. We have huge selling pressure. We're looking for a day trade. Do not overstay your welcome. These were all points that I made in my last video. Don't believe me? Please go back and verify. So we're only looking for day trades right now because we got the market up 60 S&P points one day, down 60 the next. Who knows what's going to happen overnight, but there are some great day trading opportunities. Into my bearish searches, and I'm going to look for Royal Flush Bear. These stocks across every time frame are bearish. There is a bearish trade signal. Put up the trade signal here. You can see got short right here. Look at that steady, steady selling pressure on massive volume. Massive volume. What did the market do? Rally, rally, rally mode. Look what the stock did. Down, down, down. That tells me that institutions are in there unloading Meta in a big way on one of the strongest market days that we've had this year. Here's what the stock did. It's going to continue to go down. Daily chart, big horizontal support line right in there. You can see, you can connect all those. It's a downward sloping, very gradually downward sloping trend line, but breach to the downside. Can't get off the deck yesterday. morning, traders. It is Friday, June 24th, the last trading day of the year. I'm going to do something a little bit different today. We're 5 minutes before the open. I'm just going to look at how the market's unfolding. I'm going to set the market context. We're going to take a look at some trades. Let's start out with my previous pick. That's how I like to start all my videos off. We had META was the pick of the day, and it was a short. And look at this overnight gap down and the SPY. That's the gray line. Look what the stock did. Stock actually opened up a little bit higher, and you can see this massive gap reversal in the S&P 500. We're going to talk about that because it is significant. This is why I like the short in META. Heavy selling, stacked red candles, big volume. Those are all signs that institutions are in there pounding this stock. So what does the market do that day? Rally. There is no reason to short anything when you have stacked green candles with no overlap on heavy volume. This was a beautiful gap reversal. But you can see as the day unfolded, here we have the market making a new high of the day right in here. What did Facebook do? Facebook did not make a new high of the day. Upward sloping trend line, breach to the downside. There was your shorting opportunity. As soon as the market rolled over, and this is pretty easy to see off of this resistance level, which was that prior high on the SPY, it got smacked down. Excuse me, there was the prior high. So we'll take a look at that. But yeah, excellent shorting opportunity on META. We'll put up the orange line, 1OSI. So as soon as 1OSI is starting to go below zero, you know that a short is starting to set up on it, that the institutions are back playing whack-a-mole with Meta. Upward sloping trend line, there's your entry point. Now we've got the market backing off of its high of the day. Flag formation in here. ZS breached above the trend line. Hey, I had an alert set for ZS, and so I'm going to be able to take a look at that chart. So we'll go in and take a look at ZS, and for some reason it's probably the recording software, and because I'm getting so far into this presentation that things are starting to slow down. Beautiful compression, that's nice. Look at the steady price action. Maybe I'm changed my mind. Ooh, yeah, ZS. ZS is your pick of the day. Ta-da! Cup and handle formation. 50-day moving average breach to the upside. Horizontal resistance, breach to the upside. Orange line above zero, relative strength. Higher, low, double bottom, market getting crushed, stock making a higher, low, double bottom through horizontal resistance. ZS is your pick of the day, bullish pick. Market's going to continue to rally for about another hour or so, and then we're going to compress the rest of the day. We could fill in that D1 gap in the next couple of days to right there. And if you look at the close, it's about 390. So we still have some room to run, about 35 points or so. That is how I analyze the markets during the course of the morning. That's how I find my stocks and my searches. I'm not going to go through the bearish side because it'll just add another half an hour. But if I start to see this rally stall out, and if I feel like I want to take some shorts, which I would not be inclined to do, I see this type of price action. This is an important lesson. I see this type of price action right now. This is a very strong uptrend. Okay, gap and go. My mentality is not, gee, look for shorts when you start to see some resistance. My mentality is dips are meant to be bought. So when I get a big rip, I want to be looking for opportunities to take gains on it. Market's been choppy. Wait for that little dip to come in, see how the stock responds. When you get that pullback in the underlying stock, you want to see that relative strength preserved. As soon as the market dip is resolved, I'm looking to re-enter those very strong stocks. So I want to always be trading from the long side. Good morning, traders. It is Wednesday, June 29th. Let's take a look at our last pick. Every single video starts off with my last pick. I want you to get a feel for how well this system works. Friday was the last video that I recorded and it came out before the open. So let's take a look at my pick. ZS was the stock that I highlighted. Here you can see stock raced up with the market. We had a massive gap and go formation last Friday. Our least favorite scenario. I'm going to get into trading gaps in just a little bit. No reason to chase anything right now. The market is so volatile. There's no reason to chase stocks, especially on the upside when we have a very strong market trend lower. So you come in, hey, Pete likes ZS today. I'm going to keep an eye on it. We'll take a look at why I like it longer term. Stock rallies up. Pete, how do I know what to do? Stock rallied up, looked great on the open, but you told me to hold off. Well, here are your clues that you should be watching for. These long green candles are significant, especially the opening price of them. You want that price to be preserved. You want the halfway point of these long candles to be preserved as well. It's relevant, not as important as that open. The stock comes up and it hits resistance. So now the stock starts to pull back. You get two stacked long red candles that erase that long green candle. This is bearish. That is not a good sign. That tells you that the stock has sellers. So you should patiently wait, and you can also see orange line below zero. This measures strength relative to the S&P 500, and you can see how the stock is very, very weak relative to the S&P 500. Three stacked long red candles, and now all of a sudden, you start to see some price compression. You can see how the bodies of the candles are getting smaller and smaller. That's one sign of support. You can also see that that's the opening price. All right, we're finding some support. There we have a bullish hammer. Try to get below that opening price. No go. Bounced up. Here we've got another test of that low right in here. No go. Little bullish hammer. Nice long green candle. So things technically are starting to improve here. You can also see on the chart that ZS, which was the pick of the day, is starting to gain momentum. It's getting its relative strength back, and you can see how it continued to be strong relative to the S&P 500 because orange line above zero. That was a beautiful little entry point. You can see from basically 165 to 170 is where the stock closed. Really nice little 5-point winner in here. No fear. But the question still looms, how do I know that this is a good entry point? Am I just going to go off of this relative strength? No, you would also want to make sure that you have a market tailwind. So let's go in and take a look at the price action from last Friday. You had to act quickly if you're going to catch the move. We don't act quickly because we don't want to chase a gap and go formation. But if you're watching ZS, here's what you should have in the back of your mind. Stacked long green candles. Pete told me, and please go back and reference this in the video, I had mentioned, I believe we're going to get a gap and go formation. That means that this pattern is going to run its course in an hour, maybe 90 minutes, and then we're going to compress. The rest of the day, we are going to compress. It's not going to do anything. That was an excellent call. And you can see how we got tiny little rally in the last 10 minutes of trading. This is a 5-minute chart. So in any event, as far as the market's concerned, we reach that buying climax and then we flatline. Well, the good news is that if you're a buyer of stocks, you know that you still have that strong market tailwind. There's no reason for you to bail on stocks right now because the market is going to continue to be strong. Every little dip gobbled up, gobbled up, gobbled up. So you don't have any fear that the market is going to fall apart. Market first, market first, market first. So now you start taking a look at ZS. You're like, okay, well, it's a tech stock. It's pretty volatile. It's pulled back. Tested that open from the day. 1, 2. So now we have 3 tests of support. Downward sloping trend line, breach to the upside. Nice long green candle in here. Okay, things are starting to cook in here. And I've got strength relative to the S&P 500. This day trade, a choppy move, so not my favorite. I like GM for a couple of reasons. If the economy is going to be in a recession, then car stocks, automotive companies are going to get hit. And we have this nice little upward sloping trend line right here. So the caveat to the trade could be that if we are below that upward sloping trend line, then you can take a bearish trade. And the notion would be that the stock has the chance to go down and test that low at 31.20. Well, the stock right now is at 33.99, so call it $34. This opening right here is what I'm looking at. So if GM is below $33.11, we're going to take a short position in GM. That's going to be your pick of the day, but that condition must be met. Also, very important, I'm only looking for day trades right now. I'm not looking for swing trades. You can't swing trade this garbage. I mean, look at this. You're up 70 points one day, you're down 70 points, you're up 50, you're down 50, you're up. Then you get these long. You can't trade this. I mean, if you came in here and you thought, okay, this is it, we're in go-go mode, we're going to run higher, and then you get a day like yesterday, swing trades right now, just don't do any swing trading. If you are a swing trader, there's a good time to just take some time off for the next 2 months. We still have an FOMC meeting coming up in July. They're talking possibly 75 basis points right now. Asset managers are not going to like that, and they're going to wait at least a couple of months to see if the economy holds up. If the economy Good morning, traders. It is Wednesday, July 6th before the open. Let's start the video off with a look at our last pick. In fact, I've got a couple of picks because I did highlight our new mobile app. So we'll take a look at that a little bit later on. GM was the short of the day. I had mentioned to you that we wanted to see the stock below 33.10. Stock hit below 33.10, almost right on the open. The first 5-minute bar, you would have been in the trade. Very nice entry point. Stock never comes back and challenges the high of the day. We had weak market conditions. Market first, market first, market first. You can see how GM had a big gap down the next day and it continued to drift lower. So from 33.10, it actually got down to about 31.30, so that's a really nice $2 winner on a $32 stock. Another pick that I showed you was MPC. I showed you that right back here on June 30th. And we'll go back and take a look at it. Please go back and check the video. I want to make sure that you're checking these so that you can validate what I'm telling you is actually true. The video came out right in here. MPC had been selling off hard, upward sloping trend line. I had mentioned in the video, hey, looks like the market's going to be rolling over here. We have a double top. So yes, MPC actually sold off very nicely as well. So let's go in and take a look at the market. I'm going to pause for just a second. So let's take a look at what the market did. This is the price action that I showed you in the last video where I highlighted the mobile app. I had mentioned to you that we filled in the gap, bearish hammer, seeing some tails above body, another bearish hammer, and so we're seeing resistance at the high of the day, upward sloping trend line, breach to the downside. Look at that nice little decline that we had. I told you we're getting a market decline in here. So let's go in and take a look at the daily chart of the S&P.